Hey guys, welcome to another video. This is Mehdi with Wall Street Vigilante. Thank you for watching this. As always, if you find this useful, press that beautiful and lovely thumbs up button and subscribe so you can learn about other videos. So what we're gonna do today, I wanna, a lot of you guys may know, my main account is ran through Thinkorswim. And this is where I do most of my trades, day trades, swings, longs. But I did do a little experiment in Webull. My progression of app use was, first I was using Robinhood for a few years, then I moved to Webull, and I used that for a few months. I want to say a few weeks to a few months, and then I still kind of use it, and then I migrated pretty much my entire portfolio to Thinkorswim. But back to Webull, I want to cover today how you can swing or long trade with Webull to make good profits. Now, let's go to, I want to go to trade, and I want to go to account, or account was over here. So as you guys can see, I only have $1,380 in this account. I originally put $1,000 here, and as you can see, here's a good timeline, or right here's a good timetable. When I invested in the two stocks that I'm going to talk about, it was actually it was right around here. So it was like right around beginning of April, and now here we are. When I'm recording this is 17th of May, but this is shown until 14th of May. That was the last market day open. How did I choose these two stocks is basically what we're going to cover. And my gains so far, as you guys can see, that's the Dow Jones. Let's go to NASDAQ. So NASDAQ's growth in this period has been 26%, and these two stocks that I chose have outperformed NASDAQ by 10% or 12%, sitting at 38%. This is a whopping almost 40% profit in 45 days. Now, I know we come off of coronavirus gains and all that, but again, this pretty much tells the whole story. Everybody wants to beat NASDAQ. NASDAQ came right back up during this pandemic, and pretty much it gained all the losses, and it went even over. So if beating NASDAQ during this time, it's beautiful. Now, how did I find these two? These two, first of all, are oil energy companies. I had no idea what they were at the time, and to this day, I still don't have the slightest idea of what each one does and what differentiates them from other oil and oil services companies. But I used the screener in Webull software, and with a crazy, high emphasis on analyst ratings. So we're going to go over that, and I want to teach you guys so you can also make money using the same thing. So WPX ET. So remember those names. When we go to the screener, this is basically how we do this. When you go to the screener section, this is essentially what you're going to see is some predefined values and fields that we're going to play with to get exactly what we want. Then on the right side we have this window, so we could sneak peek at financials, quote, right, some information, some useful information here, but what we mostly really need is financials and analysis. I'm also going to use Yahoo Finances to also get some ideas there as well, but mostly I'm going to use Webull, right? So we're going to spend 9% of the time here choosing these stocks. So what I did 45 days ago when I chose those was I was particularly interested in energy fossil fuel, because at the time I was investing long, and I knew the market has gone down because of the coronavirus situation, and oil price has gone down. So that tells me that what I need to do is go after oil companies, because when, as Warren Buffett says, when people are fearful, you need to be brave and start purchasing stocks. And so where you want to buy the stocks is when there can't be any bad news anymore. That's where you want to find out what companies won't go bankrupt, what companies are going to gain back their losses, and that's how you make money. The only thing you got to really worry about is, are they going to go bankrupt? If they're large enough, big caps, good profits, good balance sheets, then you shouldn't worry and you should invest. Now, the very first thing, so I chose the market, the sector, right? And I want these to be United States because a lot of companies in these situations, they need to be protected, and the United States really does protect companies. I don't want any other foreign country because I don't know much about them. So energy, fossil fuel is the next that I chose at the time. But then again, if you're interested in some other area, if you want to do financial, you go find financial, or banking, then do that. Pharmaceutical, do that. Whatever you're comfortable with and is your niche. In this particular case, we're going to do energy, fossil. So the very first thing I do, interestingly, counterintuitively, I go to the very bottom here instead of starting from the top, and I say Analyst Ratings, strong buy and buy. The reason I do this is because analysts spend hundreds, thousands of hours on each stock, on analyzing them, looking at their balance sheets. This is their job. So my job during the day, when I'm not trading, I'm an electrical engineer. If somebody wants to know how to design a circuit, I'd much rather have them come to me and ask me rather than just go and start learning what electrical engineering is. So in that sense, I want to go to specialists and see what they are going to tell me. And I think I can't remember where, if these are. I don't think these guys are Webull's analysts. I think Webull is getting it off of another website. I think they might get it from Yahoo News or Yahoo Finance, but we'll go check it out in Yahoo Finance as well. Make sure that these numbers are good. So or these suggestions are good. So strong buy. The reason I don't just do strong buy is because it really limits the number, the filter, too much. So we go up. Next stop is the quotes indicator. The only thing I'm really interested in here is market cap. You could do price if you want, you could do percent change, but what I'm really interested in is market cap. Then I go to financial indicator, EPS. What I'm really interested in is, -1 is okay, all the way to, why would I at all have a max on EPS? Earning per share is, the higher the better. Then we go and add P over E, dividend yield, and and also debt to asset. But if you're interested in return investment, that could be also a good indicator, but we're not going to use that today. Let me add it. We'll just see if we need it. That's pretty much it. I don't want to make it too complicated. Price per earning. You got to be careful about this one. I put this one on 3 to 15. That's my number. And the reason I do that is because, you might say, well, don't you want the price per earning that is the lowest? Why would you pay higher on price if you could pay lower on price to get a certain stock? Well, yes, but then you're losing all those growth stocks, right? So I want to get some of the growth stocks as well, and not really limit that so much, right? And also when the dividend is good, when the growth is good, when people know that the company is coming back, when the stock is popular, this number really goes up. But then there's a limit. I'm not willing to pay at this point in the market on 17th of May, or back then. I'm really not on the bottom of the, right now we're not at the bottom, but back then on, beginning of April, I'm absolutely not interested to, pay too much for the price of a stock, because why would I? Maybe I can't remember, but maybe back then I had this on 10. So then we go on earnings per share. So we talked about this already. Then dividend yield. I'm not really too big on having a huge dividend yield, but it's a nice to have. So let's just put that on 1% for the time being, and max, there's no max really. Return investment, that's okay. We can just, just expand it to the whole range. Debt to asset. So this is what I'm also interested in, is 0 to 75% is what I want the debt to asset of the company to be. Most likely you guys know what this means, but basically this means, if the company has 100% asset, how much debt it has. And in this case, 75% of that asset, the ratio of debt to asset in this case is 0 to 75%. So yeah, that's it. And this is what we end up with. Now, if you wanted to expand these and have more options, then that's perfect. Just go to one of these indicators and expand it. So what we can do, let's go and change this to 0.5 billion. This is really, I forgot to really play with market cap, but this is really what I'm interested in, 0.5 all the way to, I don't have a max on this. So we can see there's a lot of options here. I want to kind of initially, reduce this a little bit. So maybe we can go to EPS. Maybe we can make this +1, and that should get rid of some. Now we still have 27. Let's try to get 15. So maybe we could increase the yield percentage, the dividend percentage. It's good enough. Let's try to play with this return investment. Make sure we don't have 0 return investment. Okay, all right. Debt to asset, maybe during this time, if we don't want bankruptcies, maybe this is a good indicator. Okay, cool. So these are the few that we end up with. Now, I'm not really sorting anything here, right? So we got 9 results. Is perfect. Make the video go quicker for you guys. So I'm not really sorting anything here. I'm starting from the top. We could sort by symbols. And what I'm doing, I'm going over an analysis here, right? And I'm gonna watch for number of analysts and what the analysts said. So I'm gonna go on CEQP. That is not necessarily something I'm interested in. Too many of them said hold, and 10 analysts. That's not necessarily a high number either. So let's go to the next. 11 analysts buy, maybe potentially. Okay, this is what I want to see. EPD. This is a good example. I'm really glad this one showed up on our radar. 24 analysts said strong buy. 37.54. If you add those up, 4 and 7. Let's say if this was 6, that'd be 10 plus 50, 60, 90% of the analysts. Right? I guess I could have done it the other way. 92%, almost 92% of the analysts said buy and a strong buy. And this is what I'm going to invest in. Most likely we're going to look at the balance sheet as well. So EPD, I just wrote that on my notebook that I have here. And also, so 24 is what you want to see. Percentages here, what you want to see. And over here, these analysts, the cheapest guy here said $18 low. The most generous one was saying 31. It could possibly hit highs of 31 within 1 year. These are annual estimates for annual return, and we're talking long-term investments here. And currently it's at 17, and it could go to 23.91. Let's do quick math here. 23.91 minus what we're at, 17.17. Divide that by your starting price, what you put in, and that gives you 40%. So now the question is, are you interested? Like, is that okay for you? So, is 40% roughly, right? And that's not gonna happen all the time or 100% of the time, but if you get a 40% return on your investment, is that something you're interested in? If you want more, maybe you need to look into swing and day trading. Maybe if you want, you're okay with less, but you want to take less risks, maybe you can analyze this. Maybe you can find a stock that has even a better strong buy to buy ratio. I haven't really seen very many stronger than this, but that can kind of guide you as far as what you're looking for. This is perfectly fine for me. 40% in 1 year is beautiful investment. Let's go to next. 5 analysts, no. 18 analysts, a lot of holds, no. 20 analysts, okay, we're looking at something good here. 30% strong buys, 65% buys. So 95% of the analysts fall here out of 20. And this is Phillips 66, right? So very famous, 70.93. Hold on. Yeah, oh, we could do backwards, that's fine. Minus 82.18. It's 11.25. Percent, 11.25 divided by 70.93. 15%. Are you okay with 15%? Then Phillips 66 is your guy. So let's go here and say PSX, our old friend Yahoo Finance. So let's go here and right there. So market cap is 30 billion, right? So this is what makes it a little bit safer to invest in. So 15% profit, but safer investment. Now the other guy we looked at with that crazy of that crazy, was it EPD? With that crazy of 40% profit, it probably has higher risk. Yahoo Finance summary. Oh, also 37 billion. Interesting. Okay. Yeah, so this, and you could see even Yahoo is rated it extremely undervalued. Let's go analysts here while we're at it. And you can see that $22 analysts here rated this strong buy and buy. Even Yahoo is telling us the same thing. PSX, what do analysts say? Okay, so this one is not, well, 17 analysts, still pretty strong buy. There's a lot of holds though, not here so much, right? So, and it has, this one has a 1.7 recommendation rating, and this one has also a 1.7. So of course, between these two, I'm gonna choose EPD, right? Market caps are the same, all of that. Now, one final stop would be, while we're at it, let's go to finances. Maybe we could do like a side-by-side situation here. Like, so where are we at? Okay, so income statements, financials. Okay, so one of the things that I like to look at on this first, the income statement sheet, is gross profit, and you can see for revenue of 105 billion, and that is in thousands. So that's 105. Yeah, it's not 105. Hold on, it's not 105 million. It's 105 billion. It looks million here, but then you have to multiply by 1,000. So for 105 billion, the cost of creating that revenue is 92. So the gross profit is 12. So 12 over the total revenue is roughly 12%. So 12% profit margin. If you go to the other one, I promised you that it's higher right there. So total revenue, 31 billion. The cost of producing is 26. So 5 or 31 is a lot better. 5 divided by 31. 16%. So it's a little bit better. Then we go to balance sheet. Assets, liabilities, current liabilities. I'm interested in total current liability, 9 billion. And then current assets, 7 billion, right? So in this case, these guys have more current liability actually than current assets. So that is something to worry about. Okay, and that's what makes this guy high risk. Then we go to balance sheet here, and we get total current asset is 14 billion, and total current liability 11. Right, so 11 in liability, current liability, 14 in current assets. So that's what makes Philips a better investment or less risky investment. So you're risking with EPD gaining 40%. You're not risking much with Philips, not going anywhere. It has a lot more current asset than liabilities, current liabilities. So it's in a much better place. But we do have to keep in mind that their cost of operation is a lot higher too. So I think they're a tie to me. I'll personally choose EPD because there's more money in there. That's pretty much the sole reason. Anyways, back to the chart or the Webull. That's how you do it. Now let's look at some of the other ones. Let's see what other picks we have. Maybe we can find something better. Philips again. Total. Yeah, Total was one of those where it has a few analysts, but it was so good that I looked into and I purchased, and I actually gained some money here as well in my main account, in my Thinkorswim account. So Total, I also recommend them, but do your own research. There's only 6 analysts. Next one is Valero Energy, 20 analysts, 90% buy and strong buys, which is really good, and $60 to $70. So roughly the same gain as the Philips. I'll let you guys go and look at the balance sheet for this one. So we're gonna wrap it up here. What makes this screener very different than others is that you have this analyst rating that you just basically don't have in any other screening apps with screens that I've ever seen. And hope this helps. All right, thanks guys. Leave a thumbs up, subscribe, and see you guys in the next video.